What's up, traders? Happy Friday. Thanks for spending this Friday afternoon with me. It's been an interesting week. We have to talk about Bitcoin again. I actually found one of my posts explaining my position on Bitcoin, at least the short term, made one of the editor's picks over on TradingView. Had a lot of good commentary over there. I'm going to talk about that in depth, kind of go through each of the objective levels that Bitcoin has hit this week. It's just kind of meandered around below those levels. But I also want to talk about my long term because I get accused of being a little bit too much of a perma bear, but I'm not. I've been pretty bullish on Bitcoin for about over a decade now, but I just have a more conservative view about where this thing is going in the long term than hits the sensationalism of social media. So going to talk about that here in a bit, but we're going to let people filter into the live stream to catch it live. So hang out through the music or skip ahead if you're watching this later, and we'll talk to you. See you in a minute. I've been talking on mute this whole time. Ah. Oh, okay. All right. Sorry about that. I had this muted so that you don't hear my chair squeaking around. Oh, man. Okay. Oh, we'll do it again. All right. So we're going to talk about Bitcoin today. I got to redo everything. Oh, man. That sucks. Okay. So I'm just going to turn off that button, honestly. Nobody's perfect. I make mistakes, especially, sometimes in trading. So anyway, what I said first of all is I am going if anyone sends you a message with my little icon right here, it's not that I don't want to be your friend. I want to, I'm not going to ask you for money. Okay. So, man. All right. I got to recapture myself here. We're going to talk about Bitcoin today. We're going to talk about both the short term and the long term, why this level is very important. I had a post that I got on TradingView this week that got a lot of traction. About 18,000 people saw it. Hopefully, they learned something from it. Talking about the short term, long term. I'm going to go through that and I'm going to record a video about it. Thanks, chat, for pointing out to me that I was on mute this whole time. Oh, my goodness. My goodness, my goodness. And then yeah, we're going to talk about stock trade this week on Citigroup. It was a textbook example of trades and the methods I like. It's a trade that I had to take, and those are the ones that really fit within my rules. I do this to teach, and so if you guys have questions, make sure that you put them in the chat. As I'm going through and teaching, and also put symbols in to look at in the last half of the live stream. And then finally, next week, I promise we're going to talk about politics. I normally don't because, frankly, I think people put a little too much weight into politics. And so we're going to talk about it purely statistically and probabilistically. We're not going to talk about if somebody wins or who should win or who will win, blah, 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 blah. I've seen so many articles this week about Wall Street is positioning for this, but you got to understand, journalists, they got to write something every week to clickbait people and keep them interested, and so they can sell ads. I'm just here to teach, and I want to kind of realign people's perspective to the truth around what different outcomes will happen. But this week, we're going to talk about Bitcoin because it's in a much more interesting place. And then, like I said, I'm going to record it for TradingView as well as to post on YouTube later. So bear with me, guys. Usually that's we'll do it live kind of thing. Yeah, but we'll teach. So without further ado, let's see. Let's do Tesla. Yeah, we'll talk about that a little bit more this as well. What Tesla? I think it's one of the biggest one-day moves they had on earnings this week. In like the last decade. That's pretty impressive. So I got some opinions about that. So anyway, this is Bitcoin as we currently stand right now. This week, after last week, I talked about how price had gotten to a very, very key level. Sunday night, I entered a futures trade short. That's what I circled in the initial things. But there's a reason. There's a big, 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 big reason. And the things I want to talk about basically are the short term that I'm betting on, but also this right here, which I brought up before in live streams, and I want to incorporate this into my video. This is the long term, and I think this is for me, I think this is the best way to look at Bitcoin. And when I say long term, I'm not talking about like next year. I'm talking about 2030, like going out a decade, because we're starting to see over the years a very distinct pattern emerge. And so I get accused sometimes of being a little too bearish on Bitcoin. That's just because I'm a contrarian. Forgive me. When everybody is yelling and screaming that something is sure to happen, I got to take the other side, guys. I just have to, because the market, it just loves to punish that kind of certainty. The market is a sadistic beast. And it just loves to show people that it can do what people said it cannot. So, all right. Thanks, chat. I'll make sure not to make that mistake again. All right, so let's get into it. Let's get ready. I'm going to start with a fresh chart to explain what I mean. All right, let's go to the daily. let's get ready. All right, so publish video idea. We'll do this screen. Okay. What's up, traders? I wanted to give an update on. Bear with me. It takes me a second. Nope. Publish, record video idea, screen 2. What's up, traders? I wanted to give a video update to the current price state of Bitcoin, both the short term and the long term. And this is a follow-up to a post I made on TradingView earlier this week when Bitcoin hit a real key level. And in this post, I laid out each of the reasons for the level. There's basically 3 confluences that are coming together at the 69K level. But, I don't want to be too bearish. So I'm also going to go into my long-term prediction. I don't mean out to 2025. I mean out to 2030 and beyond, because we can kind of start to make guesses a little more conservative than you may see on social media, but I think more realistic guesses as to what Bitcoin's future is going to hold. So let's talk about the current price action right now. I don't need to tell you guys that we're in a bit of gobbledygook consolidation that's been going back for several months now, all the way back in March. So we're in October now. That's 7 months. And so we had a new all-time high back in March this year, 2024, March 14th. But the problem was it didn't really give us a conclusive break of the past all-time high back in 2021. And here's where we sit now. When something comes up to a major all-time high, you really want that weekly or monthly bar to bust through it and close solidly above. You got that in the first month of March, but that's not what you want to see. And then every subsequent month has tried to get back up there and failed. And this month, October, has been no different. And so that really creates one of the key levels that price hit over last weekend, about Sunday, October the 20th. And that ends up being one of the key components to this current stopping point in Bitcoin's price action. And it's just an objective level. Okay. And that when I try to trade, I want to see objective levels to trade off of. I don't want to wonder, did I draw it right? Is everyone else looking at it? And these objective levels, you can see, not only did it hold over the last week or so, but back in July, this was also the level that it held. It also launched a bearish trend from it here. And so the market knows this level is there. And so it becomes a trading opportunity. Now, I know that trading technical analysis often gets the bad rap of astrology for men. Well, frankly, for some people it is. But my view of technical analysis is it's not trying to predict the future. It's trying to find opportunities. And when you have an objective level, you end up with an opportunity. Let's talk about something a little less objective. So the second component is the expanding wedge, or the expanding triangle, or the inverted flag, or whatever you want to call this pattern, okay? And this is my least favorite way of doing charts. I don't trade off of this, but I'm aware that these are things that people draw and go off of. The reason I don't like it is exactly what you saw when I was trying to draw it. Do we draw the line from here? Well, it's already violated. Do we draw the line from here? Okay, that works, but what about this one? And you see, now, do we need to redraw it now? See, there you go into the realm of the arbitrary. And I don't like it. I don't trade on these things. Now, and there's books that can be written and sold for a profit that talk about all these patterns and what they mean. That's fun, I guess, but I'm trying to make money in the real-time trading. But I have to give it credit and be aware that this is a self-fulfilling prophecy that people are looking at, that this could actually be something that they trade off of. And so, again, right there, you have it's almost like a crossing that you had of the past all-time high with the top of that trend line that happened 2 weeks ago, and voila. Finally, and this is something I call a cheat code for markets. Volume profile. And I got asked this week on social media what I use for that. I like to go into the TradingView tool and use fixed range volume profile. There are some indicators you can draw, but that one just works best for me. And here we can get the various volume profile levels. This is where price and volume came together in the past. And we're going to look at this entire consolidation pattern right here. We can probably look at the consolidation pattern itself instead of that prior trend. But these nodes, as we'll call them, of course, we have the point of control, which is the red line right here. That's the thickest part. That's where most of it happened. And then we have these mountains, these little hilltops right here that represent various volume profile levels. And so what really sticks out, and what's really kind of the last significant one, is this one right here at 69,300. Okay? And once again, that becomes the third component where price stalled out and held. So you had three major levels that came together and price hit them and held. And now this week, we've been sitting out here. Like I said, I've been talking my book, being open and honest. I am still short all the way back from April using the inverse ETF, BITI. I'm not short Bitcoin. But I do have some futures positions on expiring in November that I put on at the beginning of this week, actually, and kind of sat here, took a little bit of profit in this leg down, and now we'll see what happens. We'll see what happens. But that's where I'm positioned short. But that doesn't mean that I'm perma bearish. So let's talk about the upside of Bitcoin. And this is a chart that I drew up and I've had drawn for quite a while. I reference back to it, but this is a logarithmic chart of Bitcoin. Now, I don't trade on logarithmic charts because the levels that I like to trade off of, 50% levels, volume profile, etc., they don't draw very well. And logarithmic is a much better tool for encapsulating a long-term big price movements, which you'll see in, like, obviously Bitcoin, different cryptos, and the stock market going back decades. But it's very useful for Bitcoin. And what we can kind of notice about the logarithmic chart, we don't even need to use a logarithmic chart. I mean, we could just basically go and we could look at it in a standard chart. Let's clean this up right here. But obviously, the highs are going higher and the lows are going higher. And if you talk to anyone that's invested in Bitcoin, they'll say that it's got one of the best performances of any asset class in the last X number of years. And that's true. But we also have to notice the scale of these highs and lows. And as you see, I've kind of hacked together my own little angles to make a little curve. And it's interesting because it's starting to resemble the sort of exponential curve. I'm not saying that this is going to follow the Bitcoin supply, but it's essentially what the Bitcoin supply is programmed to do, which is form a curve in that the highs are ever going higher, the lows are ever going higher into infinity, but at a decreasing rate. That's the key. Let me repeat that. The highs are increasing, but at a decreasing rate, and the lows are increasing at a decreasing rate. And we can see that if we look going all the way back to 2011, there was the low, come to here, and from here it was about a 23-degree increase up to here, 13.8. If we kind of go and we cycle that, we fractal that out, the next is going to be 5 and then onward. And we see that we can start to draw what really should be, realistically and conservatively, if you look at social media, the high range of Bitcoin going all the way out to 2030. We can draw this out further if we want to. We're all just speculating. But what does that really tell us? And where are we looking at this? What am I going to use here? Let's do can you do a price label? So let's look at January of 2026, okay? Because we're almost into 2025 right now. And so if we just think about like, okay, what's going to be the cycle high? Because a lot of people want to know the cycle. And I've got layered out right here, the vertical blue lines are halvening events. We've already gone through the halvening, and everyone's always looking for, where's that high of the cycle going to be? Where's that high? And also, where's that low going to be? Where are we going to find these opportunities to, find the best or the worst or whatever you want Bitcoin. And and you can see from this, we're smack dab in the middle. Now, the high people want it to happen very quickly. I think everyone wanted the high to happen here in 2024. We're probably not going to get it. Maybe. We still got a couple months left. Let me not say that. I'm talking my book, guys. I'm currently short. Forgive me. We'll see. I could be wrong. We'll talk about that in just a second, what could happen in the near term. But it could also happen later in the cycle. It could happen in 2026. And that level is probably going to be somewhere around 160, 170, 180, depending on when it happens. Likewise, what can be the low? What's the point where I want to buy Bitcoin? Yeah, for real. I'm not going to buy it if it gets low. Well, that's going to be somewhere, let's say around that same time, if that happens, about in the 30s. So anywhere, just think about it this way. If you're looking at, is Bitcoin an investment for you right now? Your spread, your potential reward and risk, realistically, based on past price action, if we look at it objectively, like what the highs and lows are doing over the past decade plus, you're looking at between 31 and 174. Now, that's a good return. And yeah, from here at about 69, you're looking at a little bit like about 55 to maybe 60% drawdown. That's not so good. But do we need to buy it now? Well, that's for you to decide. But I mean, you're basically looking at a 2.5 to 1 reward versus a 60% drawdown. We're just right in the middle. And so let's go back to price here and kind of finish this up. So just to kind of recap, this is my long-term prediction, and it's going to be, and you're not going to see anybody like, share, and subscribe to this, I think, on social media, because if I said that Bitcoin was going to be 13 million, everyone would share it, but it's not. I mean, come on. I mean, yes, it can, but that's what people are going to share. But this, as a trader, as me trying to make a position, an educated risk assessment, this is what I'm looking at. This is the spread between now and 2026, either between 174 and 31. And we'll keep this updated on my live streams as we go forward. I'm going to keep doing these things. But in the near term, as I said, I'm positioned for this level, this resistance to hold. And what does that mean, though? So in my experience, in my decade plus of trading, the one thing that I think happens most often when you come up to a all-time high such as this is you're going to, well, we have two all-time highs. We have the past all-time high, which we held, which is now a resistance. It's obviously showing us that it is. And then you have the all-time high, which is back in March, okay? So if you get a good solid daily, weekly close up above this resistance right here, you can almost guarantee, in other words, I'm going to take a trade long up to 74. This just happens. It's almost like there's a magnetic force that's going to draw price up to that all-time high, because no one's going to short it in here after this last level of resistance has been broken. You're not going to find anybody trying to pick this out. Maybe they try. No, they're not going to. So it's really good bullish trading from about 69.5 up to 74. That you can take to the bank. Then, though, you can leave some on. You can leave some on for the breakout. But you're going to have a couple of things that could possibly happen. It can shoot up, or it can come back and retest this level to confirm it and go up. Or, my favorite setup, it can go up, but then within the week or month, close back inside of it. And that is a false breakout. That is a bearish sign. And so there's a whole slew of things. There's basically about 3 different things that can happen. Straight up, come back, retest, and go, or come up and do a false breakout. So there's 3 possibilities that can happen here. But this right here, this is a high probability event. Or we can go down. And it could just be a very slow process. My target is, and has always been, since the failure to break the all-time high, it has been the ETF launch level, basically around 43K. Still remains my target. And that is because, as I said at the beginning of this video, the market loves to punish absolute certainty. And over this year, there has been nothing but absolute certainty that the ETF was going to raise Bitcoin to six figures, raise Bitcoin to a million. You go on social media, you'll see it. It's going to happen, guys. Absolutely. Can't lose. And the market just loves to punish that. And so that's where I think that we'll return to. And I think at that point, the hype will have died down. People will start questioning things. And then a market can actually rise on skepticism, as they typically do. So once all the hopium has been dashed and it enters a realm of skepticism once more, that's a good value. That's a good value to buy any asset. And so that's what I'm waiting for. But they could be right. And these are the potentials for that. So hope this was informative. Hope this helps you guys learn a little bit about various elements of price action. And I hope that you trade wisely. Thanks for watching. All right. Thanks for that. Thanks for
What's up, traders?
I wanted to give a video. Okay. Okay. All right. Let's do this. Okay. Any questions, guys, on chat? Need a script. Yeah. Any questions on that in chat, guys? I love to answer questions about this kind of stuff. If not, we'll go into talking about the trading setup this week, the spike setup on Citigroup that I took, I think, either Monday or Tuesday it was. Tuesday is a really good day for trading. I like Tuesday for trading because it's not Wednesday or Friday or Monday. Thursdays are pretty good too. KO had a spike. Okay, yeah. Get the questions in. Get the symbols in to look at, guys. We'll look at that after I finish talking about Citigroup and Tesla this week. All right. Oh yeah, I need to talk about McDonald's. Yes, I do need to talk about McDonald's. All right, let me get through the Citigroup thing, and then we'll put that in. So give me a second. Thanks for hanging out, guys. This is fun. I like talking about this kind of stuff. I like it when setups work, especially, and I have it in posterity that they work, so I can go back and say, hey, this is a useful tool. So earlier this week, and I posted this on Discord. This was, and I wish that the remainder had gone, but we'll talk about the trade management, the profit taking here as well. So let's just start fresh. So every day that I am not lazy and do the scan, I do a scan for 30-minute spikes on the S&P 500. And oftentimes, there's some good opportunities, but there's a lot of noise. But the way I filter the signal to noise is I look for spikes that happen at key levels, 50% retracements and or volume profile levels. But when it's both, that's when I say I have to take it. I have to. It fits my rules, and if I don't, and I look back and I missed it, I'm going to think I was a wuss for not taking the risk. But it's really cool when I find one of these trades that fits all my rules and it just works. You know why? Because these are my rules. These have come from years of watching these kind of setups play out. And there's a reason I have them. But, I'm like everybody else. I wake up in the morning and I'm like, maybe I'm not, feeling it today, or maybe this won't work. And so partly we have to be computers about trading. But the other part is, we have to use our intuition to be able to find and sense these sort of things. It's a very fine balance that we have to strike. But here's Citigroup. There's a bank. And you have a trend that started back in September. This is a 30-minute, by the way, which is my favorite time frame for trading stocks, in case anyone asks. I don't have a preferred timing frame for everything, but 30-minute really kind of encapsulates stock trading because there's 13 of them in a day. And so that's a lot of good time to give you a very granular look at the day. 5-minute, 1 minute, those are the day trading things. But 30-minute helps me take a trade for multiple days, which I like to do on stocks. Stocks are really better for swing trading. I'm not a scalper on stocks. And so this was a 50% level of this trend that began on Wednesday, the 11th of September. You also had a earnings little bit of price action in here, which created the top and created this kind of price action, this pullback right here, which is what set this trade up. Now you'll see here I have this indicator that's showing me these little crosses along with median and ATR clearance. This is free, by the way. If you want it on TradingView, you send me a message on Discord and I will give it to you. The only thing I ask is that you send me that on Discord, join the Discord, and ask questions there. That's the only charge I have for it. That way, you know how to use it, but also watch my videos where I talk about setups like this. But this is my thing. This is my indicator. It's not that fancy. All it is telling me that this opening bar, 930 open bar, came down to make a low at 61.32, and then in the same bar close back above this red line, which is the Ichimoku Tenkan-sen, and that creates a setup. Now you can use these in crypto, stocks, forex, gold, which we'll look at here in a second. I think we have to. Anything. It's just a price action. It indicates where a bunch of people thought it was going one way and they snapped it back the other way, and you want to be in that side. Think about it this way: people bought it. Or excuse me, people probably sold this as a breakout down here, and then by about 10 a.m., oh crap, they're in trouble. And it also lets you know where your stop needs to be, right there at the bottom of that low right there. Add to that, my cheat code for the markets is not mine, it's just an indicator, volume profile. And of course, you have this trading range here, which created a objective volume profile level. Where's my line? Volume profile level. In fact, the point of control right there at 61.84. So you have a confluence of those two key levels. That, ladies and gentlemen, is a support. And so this sets up for a great trade because the target crosses are the 2-to-1 and the 3-to-1. Let me just draw this here in TradingView. So I always make my entry off the red line of the next bar after the indicator fires. And it fires every morning at 10 a.m. for me, or as to the scans I do. And so to do a simple 3-to-1, I always make sure that my 3-to-1 is well within planned targets. And where my planned target on something like this would be the 50% on the way back up, 64.21. And yes, sure enough, it does. All right. And so what I always want to do is just be disciplined, is always take profit, get a little bit off the table, lower that risk, make the trade free as soon as I can. And so within the same day, very surprising to me, sometimes it happens that way, I got a 3-to-1 same day on this swing trade, which I plan to hold for, weeks and possibly even more, because I love owning stocks. I like to buy stocks on little low risk setups like this, and then frankly kind of Warren Buffett them a little bit. I was talking to a friend today. He asked me, "Hey, are you in Tesla?" I was like, "Yeah, I've been in Tesla for a few years now." Like, people ask me, "Are you in Nvidia?" I'm like, "Yeah, I've been in Nvidia for a long time, and I don't have to really worry about what it's doing because my buying level comes from a low risk trade years ago." And also, if this trade didn't work out, if it broke this low, I'm out, and then I don't have to worry about it either. Sure, I can find a way back in, but I'm not going to sit here and back hold this thing down 20, 30% or more. We won't talk about those kind of things right now. But anyway, taking profit was the way to go. But this was a great setup. Came back to break even, but again, I've already taken my risk off. If it stops out next week, I'm not going to be that mad about it. I made a little bit, not as much as I wanted to make, but I basically got a free trade now. And we'll hold on to it if we can. And I also know, even though it's come back to this level, what did it come back to today, Friday? It came back to the support. So I'm fine. But that's that. All right, let's jump around. Have any questions to that? Let me know. All right, so let me continue. I'll publish that at the end of the thing. All right, so Tesla. I don't have a trade set up on Tesla except just to hold. And like I said, I've had these shares for quite a long time. I unfortunately have a covered call position, which I might have to deal with. That is, we all make mistakes, and I have to say, probably I should have gone ahead and closed that covered call here down before earnings. but I didn't, so I may have to roll it. That's fine. Um, Mea culpa, my bad. But that's, honestly, I kind of like that I have a, a a covered call. In other words, I've sold a call against my multiples of 100 shares, and I kind of like that because here I am seeing a stock that I own go up 20 something, almost 30 something percent, and I'm able to emotionally be like, crap, dang it, and not get overly exuberant about it. Like, oh man, I've got to like prevent myself from taking loss. And it's actually puts me in a very, very good, I would say, emotional position for managing this trade because no matter what it does, if it goes down, I feel good because I'm making premium on selling my calls. But if it goes up, I'm making money on my shares, and I can always just manage it. And so it sets up for a great. I like the situation I'm in with Tesla. But yeah, I mean, what was interesting to me was they had I don't know what it was, like an investors day or something on the either the 10th through the 11th, and Tesla released amazing things like androids that talk to you and can do things, robo taxis, and the stock dropped tremendously. And then you came into earnings. Without even looking at Wall Street Bets and Reddit, I just know that a ton of people were buying puts. And I think, unfortunately, a lot of people were buying puts because of their political affiliations. And this is why I don't mix politics, at least, and trading, at least not decision making. Because there's so many people, I think, that have a negative opinion about Elon that are trying to express it with their money against Tesla stock, and you really shouldn't do that. You can do whatever you want; it's your money. But just because you can doesn't mean you should, because of things like this and other reasons. So, it's coming up to a high. I think 280 is a level that I have marked off. It is a volume profile level from way back, and then there's really nothing. But it's still a messy, messy chart, and I don't see any setups. Last year was the time to take setups on it in 2023 when we came out of this 50% level. This is where I picked it up around so my shares, my cost basis for shares wise is 160, 159.73, about 160, I think it was. I think it was 161, and I was a little pissed that day because I didn't get it at 159, but yeah, well, we'll see. But I've been holding that for quite a while, all the way since last year, at least the larger position, my larger stake in Tesla, which means, yes, I had to sit here and kind of endure all this. It wasn't fun, but now I'm in a position where I can be a lot more hedged. McDonald's. I had a friend of mine this week. He bragged or talked about how he picked up McDonald's at 293 in the aftermarket. And so I had to chastise him as the old, risk averse uncle, the caring uncle that wants to see my proxy nephew win. That, again, it's one of those, just because you can doesn't mean you should. There's no reason for you to really pick up McDonald's when something like this happens, when you have this like made like crazy out of the blue event, which is, by the way, it's an E. coli outbreak with their quarter pounders that apparently has killed somebody, so it's not good. But he went in the aftermarket and bought a bunch of shares at 293, and I was sort of like, dude, you don't, just wait, just be patient. Now, I don't think that he traded out of it, because his objective, as far as I recall from talking to him, is to build a portfolio of stocks he believes in. I guess McDonald's is one of those. But as you can see from the price action here, off that rise in price, you have a past all-time high, which is also a little bit of, probably that's a volume profile level, I bet. Not quite, not quite, not quite. So didn't quite even go up to the volume profile level. But you have price come back up to 302, which would have been good trading if you bought it at 293. But now you're closing the week at 292. And this is kind of what I was afraid for him. The reason I am is because again, I'm the old uncle that has done things before, and I am I still hold some, but not as much, of Chipotle Mexican Grill. And this is not apples to oranges, but these are still fruit. In that the size of these companies, McDonald's versus Chipotle, is vastly different. McDonald's is obviously far, far larger. But Chipotle had its own E. coli outbreak scare back in 2015. And it actually went all the way back to the summer of 2015, July, but it was about October where, uh, pardon the pun, shit hit the fan and it went down. Now, I, being the clever, less experienced trader that I am in 2015, bought this at the 50% level. Now, this has gone through some splits, so I'm not sure. It was in the triple digits here because I think it did like a 15 or 50 to 1 split. But the price action here was I bought it at this 50% level at roughly about 10. So I think that was the price was that was 10. It was a whole number. I think what was the split? The split was 50 to 1. So yeah, that was about 500. So I bought it at, yeah, that sounds about right. I bought it at 500. Okay. And then, I saw it keep going down, going down, going down. And when I bought it, it was a nice discount. It really was. It was from the high there, it was down 35%. Yay, I got a 30%, 5% discount. But that whole fiasco took it all the way back down 67%. By the way, that's just if you haven't noticed from me talking about things like Nvidia and other tech stocks, high flying stocks, people are always kind of wanting to get in on. They're always asking me in the first pullback, hey, should I buy this? Because I really want to be in this. I was like, you know what? If you're still optimistic to buy it, it's probably not the right time. Let it come down about 50%. Let the stock give it a 2 to 1 sale, and then, well, what if I miss it? Just if you wait long enough, you're going to see this kind of a retracement on a stock, especially a very popular one. But patience is something that takes a while for people to learn. But anyway, this is what I saw back in the day, and now everything's fine a decade later, as it usually is with stocks. They go up, but rushing in the day after, or even the week after, even the month after, much less during the aftermarket of the event itself, is not something that I really want to recommend to my close friends and you guys watching. So we really got to kind of set this up to see what happens. I'm not taking a position in it. I might. We'll see. But I want to see how this thing plays out. So that's what I'm looking at there. All right. The 50 on what, Jen? Okay. Let's go through some of the things that we've got on our list here. CELH. Celsius. Now, Celsius has been a very interesting. I think we talked about this last week. I think Zishan you brought this up last week. Oh, cleared down. Okay, so Zishan had a clear downward spike on the 30-minute at a retest of the. So last week, I still have this drawn up because I was looking for you at the volume profile level of this past range of price that it was in, it's there now. So that becomes relevant, is looking at this past price going back a few years ago. And that is the level that it did come to hold this week. Looks like on Wednesday it pegged it. Thursday it rose off of it. I think this is a good idea of a hold. Hey, here's another thing too. I'm just now noticing. Notice where it closed. You have a gap. You have a gap level here. So you got a lot of good. Oh, look at that. Launch down. Yeah, you got this 30% level, but spike on the 30-minute there. I like this. I like it. I give you the thumbs up to take some risk on Celsius. The other one I'm watching to try to pick up at, again, going back to what I was saying about, not getting too hasty and like being a good trader, 68%. It's like 60, 2/3. Okay, that seems to be the number that we're coming up to here. The other time that I've been talking about is Nvidia. This isn't using 50% or volume profiles. This is just kind of a generic piece of advice of yeah. So Nvidia back in 2022, it came down 68%, 70%. Yeah, there you go, from its all-time high. Bitcoin. Hold on. Wait, that's S&P 500. Bitcoin. The drawdown from the 2021 all-time high down to the low was 75%. Before that, and the last all-time high from 2017 down to the low was 82%. From the high in 2019 to the COVID low was 72%. And Bitcoin's a little more volatile than stocks. But the point is this: if you want a deal, if you want to be a savvy investor, wait for the stock to be 2/3 off, maybe half, but 2/3, 2/3, 2/3. What's the other one that we've been looking at? It's the what's the other SMCI. SMCI 69%. Giggity. So yeah, if you're looking at a stock, and you really want to own it, like if you're sitting here and you're watching this thing and you're like, man, I really wish I was in this thing. Oh, look, we had a pullback. We had a huge 26%, 30% pullback. That's a good deal, right? No. If you're smart, if you wait, you can probably get 2/3 off. It's just kind of a thing, guys. So take that to the bank. All right. Coffee Guru, let's look at yours. AMN. Out of curiosity, how far is this down from its all-time high? Now, I don't think I could make a rule out of when something is down 2/3 from its all-time high. That came down to 57%. Because, again, I would want to look for a thing, but that's just kind of here's how you make yourself patient. When something does hit 2/3 off, then you start looking for setups, like on Celsius, where you got that clear level, that volume profile level. Yeah. So this one is a messy chart for AMN Healthcare. Although I like anything that has healthcare in the name for the long term, because my thesis, which is not anything really super exotic, is boomer. Oh, wait. I had the bar replay on. So this has come back 2/3. Okay, and now we're okay. All right, now you're talking about language. All right, let's see. Let's do a volume profile. This past action. It's coming down to there, but let's see more of this more recent action right here. Where's the yeah, it's kind of below it. It's still kind of in this sort of catching knife phase, valley of risk, as I talk about. This is the daily with something as big down. I don't know. I like healthcare as a industry. I think maybe though 36.18 is when I'd start looking for a setup based on this volume profile. We're going back pretty far there. That's a knife catching. But hey, it is 2/3 off from its all-time high, so you're better off than the people that bought it here or here thinking that they were getting a deal. So, yeah. AMH at the COVID low. Let me look through your other ones first. ACHC. Oh, we're going to messy back here, but we're just going to focus on this trend here because this is the most significant. Are we at the 50%? Close, or are we? Let's see. Hold on. Oh. I like. That's good. That is good. That is good. That is good. That is good. Got the volume profile level ahead of you. That's pretty good too. I like it. ACH. Ah, you're thinking like me. Yeah, yeah, that's the thing, man. I mean, my overall thesis on healthcare is that boomers have all the wealth in the United States, relatively, at least compared to Zoomers who have virtually none. And they're getting older, and everyone wants to live, and they'll spend money to do that. And it's not going to get any cheaper. Now, there's probably going to be, again, this goes back to the whole thing, right? Don't try to mix politics and trading, investing, but there's going to be potentially, possibly, everyone's talking about it, a serious issue with the cost of healthcare in the United States of America as it is. What that's going to look like, how that's going to play out, that is going to be a very interesting and contentious debate. We're not really having that debate right now between public and private healthcare in this country, but we're going to have to eventually. 50% at the 105.58. A little bit messy though. Let's take a look here at the volume profile of this whole range though. Let's see. Word. I like these, man. Coffee guru. You are the guru, man. Look at this. Look at this. Listening to what I say. Who cares what I say? Who cares what I talk about levels? I don't have a pen. Thank you for posting them in the chat, by the way. I'll catch these. I'll look at these later. I think I might need to just, what I might do? I might just set up an account where when people give me ideas on the live stream, I just throw some money on the stocks, and then we just see how that performs. We'll do a live stream viewer fund. I will put money behind it because these are good things. These are good, and maybe we'll make money. Maybe we won't. Maybe we'll have. If it doesn't make money, I can be like, oh well. But if it does, man, that's a great selling tool. I think the upside on that is way higher than the downside. Do it on Hood. Oh, I wanted to talk about that. Okay, let me go through these because I got to talk about Robinhood. I got to give Robinhood some credit here in just a second. I'll tell you guys why. All right, let's run through these. Coffee Guru, let's talk about this. So Teradyne. Think that's a little too messy for me there. WFRD, Weatherford International. I think I want this definitely to come back to a 50%. It may be, is it at a volume profile level? Might be. Wait, did I draw that level wrong? It's getting close. Okay, I'm glad that you brought that up to me. All right, we're gonna have to go through some of these. I might just go ahead and set up that account. I wish Zishan, your stuff is in this thing too. I really wish that the market was more bearish. I like to buy when the whole market is down. Thus, the lowering tide has lowered all the boats. How? I think we need more on that. Halliburton probably, not Hindustan place. Messy. This is one where you might get some political volatility from. Depends on what kind of wars we're going to have. AMH, American Homes. You said that's at AMSIL Limited. I don't know what you're. Okay, so let me talk about real quick as we're kind of coming into the full hour mark. Let me give. If you got any more symbols, put them in quick. But I want to talk about Robinhood real quick because Jen loves Robinhood. I think he's talking his book. That's fine. I don't own Robinhood stock, okay? But a friend of mine was talking to me about his Tesla position. He's got Tesla shares on margin. I'm like, okay, dude. That's fine. But like the question is, and he wanted to know, should I take profit? I was like, okay, well, the thing is, you need to consider how much is that margin costing you? Because in case you didn't know, to take stocks on margin doesn't mean that these brokerages just give you the shares for free. No, they are a financial institution. They are loaning you the money to put these shares on margin. Margin is taking out a loan to buy stock. You can only do about 150% of leverage. So they don't even let you take 2-to-1 leverage because over the 100 years the stock market has been around, people taking any amount of leverage has led to utter catastrophes. But people still need to learn that in crypto, apparently. But I was curious about Robinhood margin rates. Now, I had this old Robinhood account that I started in. Let me see if I can bring this up without putting my password out there. I had this old Robinhood account that I just did for S and Giggles. Okay, let me do my other account. So, hold on. Rather do that. I have this old Robinhood account that I started back in 2020 because that's what everyone was doing, and I kind of wanted to do a trading with everyone else when I first started my Discord, and so I still have that, and I actually haven't done anything to it, and so I don't have any YOLO trading gains, but I added cash to it to make sure I wasn't doing a account. So let's see. My all-time return on this. Let me see if I can bring this up here. So can you get? Let's see. Let's see. So that's going to be flipped and reversed. Hold on. There. That is 72% since 2020. Did I beat the market? Again, I haven't done any stocks since then. Let's see. Stock market. I bet I haven't on that account since 2020. Well, let's do 2021. Let me. So we've done. Let me be fair. So I started this. So the cumulative return is 45%. I think I did pretty okay, especially since I started in. I'm not going to harp too much on this. I think it was after COVID, so it was August. Yeah, it was August of 2020. So I probably kept pace with the market. That's all right. That's all right. I wasn't trading it very much. But anyway, that's just an example of you just throw stuff in there. So let's see. Your friend Rich from Palantir yet? Oh, dude, we haven't heard from him. We haven't heard from him in a long time. Like, I pour one out for our good buddy. You know. Oh my. Oh man. Like we would talk all the time on this little little friends Discord, small Discord, all through 2022, 2023, and then right before it launched. Yeah, he ghosted us around 26 in price. No, we mean around 26, Jen. No, he ghosted us like in like last year. Like it went up just a little bit. Maybe I think it came up here in like 15s. I think we were talking to him. And then he kind of just quit, and we haven't talked to him. We miss him. Yeah, I remember we got that first push, and he was very excited. And I hope I didn't make him mad by like telling him like, "Hey man, maybe you should take some profit," that kind of stuff. Clearly, I was wrong, but I'm just that conservative old uncle, I guess. But wow, I think I have like 100 shares that I did still. They're just kind of sitting out there that I bought maybe around 10. So, yay, but of course, you always wish that your wins were bigger. But yeah, that's pretty cool. That's pretty cool to have. His thesis has played out quite well. Anyway, got sidetracked. Let's talk about Robinhood again. So, Robinhood margin rates. So, again, when you take out margin, you are taking out a loan from the brokerage. And this is how they make money. And it's a fantastic business model because they have collateral. In other words, they have the stocks they can sell. or hold on to if you blow yourself up. Hopefully not. Well, they won't let you do that. Trust me, they'll margin call you. That's what margin calls are. So they have this collateral backed loan that they give to you at a pretty good interest rate. And you see here that Robinhood margin rates, you take a look, but this is pretty good considering that the risk-free rate, is 4.5 from the Fed, right? And if you put money into a savings account, like a high yield savings account, cash savings account, you're going to get about 4.5 now, maybe 4.8 if you're lucky, or if you take out like a bond ladder, you're going to be about 4.9. And so if you're paying, let's say 6.25 to 6% on margin at Robinhood, that's good. Now there is an additional $5 a month charge flat, but that just that becomes insignificant depending on how large your stack is. But this is good. And so then my friend, he is at Schwab, and so I was like, okay, let's compare this to Schwab. What? It's double. Schwab's margin rate is twice that of Robinhood. Holy crap. They are screwing people over. Wow. So, screw Schwab. And if you're going to set up a margin account, you should do it on Robinhood. Oh, well, yeah. Wait till you see Robinhood's futures pricing. Yeah, I mean, commission rates on futures should be pennies, basically. I mean, back in my day, we had to pay $7.50. No, wait. Back in my day, when I first started trading back in 2013, I was trading with TD Ameritrade, and our futures and options commissions were $15 each way, both uphill and downhill. So yes, when I first started trading, they had recently brought it down from 30 down to 50. Excuse me, 15. So in other words, when you took out a futures or an options contract, it cost you $15. So trading like a $50, options contract, you're paying $65 for it. And then you sell it, and yeah, there was no day trading of options or futures. You had to be seriously big boy. But I called because I was working in an office then, TD Ameritrade. And I said, hey guys, there's this other brokerage that'll give me futures for less. And they said, okay, your rate's now $7.50 $7.50 each way. And I was like, cool, great. And so for the first, I'd say 3 or 4 years of my trading options, I was paying $7.50 each way. That is crazy talk now, because now you do it for basically free 50 cents. And so futures have kind of stayed in that realm of like a few bucks each way, but now you can get it for much, much cheaper. I think the last one I was set up an account for was Interactive Brokers, very, very cheap. But yeah, I'm sure that their Robinhood's pricing. Now, here's the thing about the difference here. Robinhood, maybe they're just doing this to get more people in, but this is ridiculous. Charging 12%, 13% if you're under pattern day trader on Schwab. And Schwab's, of course, TD Ameritrade, of course, Thinkorswim. I've been trading on margin with Thinkorswim for over a decade now. And I am remiss that since interest rates went up, I have not checked this, because I generally kind of feel like, oh, well, if I'm trading, I'm swing trading, so I'm only going to be in a trade for maybe a few weeks. But this aggravates me, because they're making a lot of money off people that don't check this. And I am remiss for not checking this. And so this is my PSA to you all. If you are on any kind of Schwab brokerage and you are on margin, you're holding positions on margin, get off, because this is a massive, like 11-12%. In other words, you need this stock that you own on margin to make more than 13-14% in a year for you to break even. Now, maybe you think that's going to happen, but you don't know, and it could also go down, and you still have to pay the margin cost. This is robbery. This is freaking robbery. And man, it would just like I've called out TradingView for being greedy. Uh, I will not stand for this. And so you guys, you viewers, I hope that the one thing you take from here, if you didn't learn from, uh, my lessons and things like that, is get off Schwab. That is ridiculous. That is ridiculous. And I never thought I would say it. Like I kind of have a low opinion of Robinhood because I'm a chart based trader and they don't have very good charting. But I can still chart on TradingView and trade on Robinhood. And I think I'm just going to switch everything to, well, I still do my scans to find opportunities on Thinkorswim, which is TD Ameritrade, which is now owned by Schwab. But that platform is not being updated at all. So I've still got to keep some money on Schwab, on Thinkorswim to keep the platform running so I can do my scans. But I'm just going to keep a bare amount on there. It's not worth 13% margin. So PSA to you guys. Yeah. So what is Hood stock doing? What is Hood doing? I guess I'm going to become a Robinhood bull. It's doing well. Doing well. See, I rely on my friends like you, Jen, to smack me whenever I'm being obstinate about something that is actually a good thing. I'm generally pretty stubborn about things. Like it took me a long time to start incorporating volume profile into my trading, which now I call a cheat code. But I think I may have to actually many years on become a Robinhood bull. Yeah. So. All right. No, I'm not gonna sell calls against Schwab because they basically let's see what Charles Schwab. What's the symbol on that? I'm not gonna go. I'm not gonna go. Oh, you're gonna sell calls against your Robinhood. You can. Yeah, it was some kind of SCHW. Yeah. They basically went on this buying spree. Yeah, okay, so I use Thinkorswim for scans. I scan, in the mornings for, the 30-minute setups, like the one I talked about here. Like this comes from a Thinkorswim scan, just like what was it? The TFC was another one that came up from back here. Truist. This was a 30-minute scan, and then we had one for Lowe's. So all of my recent 30-minute buys, like 30-minute spike trades, they come from my Thinkorswim scan. So Thinkorswim is still a integral business product for me as a trader to find opportunities. It has been for many, many years. So I'm always going to have to keep this unless I'm going to have to go develop another system outside of this. And I'm not a programmer, so I don't like that idea. But as far as keeping things on margin, we're just not going to do that on Schwab anymore because that is just ridiculous. Yeah. All right. So thanks for hanging out with me, guys. I hope you learned. If you're catching this late, we talked about Bitcoin, both the short-term perspective and the long-term, out for decades. Talked about the Citigroup 30-minute spike trade, great example there. And then we talked a little bit about symbols, but we're going to get off Charles Schwab because that's horrible. So anyway, hope you guys have a good weekend. Trade wisely. Next week, I'm going to come back and we will talk about politics, but not in any kind of preferential way. We're going to talk about statistics about what can happen, not what if or should, but what it can actually mean to the markets. So hope you guys come back for that. Trade wisely, guys. See you next week.